Hello, everyone. This is Mike Wilkerson. I am the founder of Stormwall Advisors, the host of Stormwall.com, and the author of Why America Matters. Coming to you today on the first day of October 2023 with the Stormwall Advisors monthly update, where we cover off many of the issues going on in the economy and markets, geopolitics, and other key events around the world. For those of you who have been watching and following along, appreciate your feedback and your support. If you're new, don't forget to like this if you're watching it on YouTube, to like it, to share it, and you can subscribe to my channel on YouTube and check out all my writings at stormwall.com. So why don't we get right into it? I wanted to start off by talking about some of the big highlights of the last couple of weeks. So first of all, just dealing with some issues in the economy. So we're back to seeing oil prices, energy prices driving inflation, with oil now barreling towards $100 a barrel. And at the same time, this month, we saw inflation rising again on those higher energy costs. We've also, during the month, saw that national debt of the U.S. crossed the $33 trillion mark for the first time. We're now at a place where we're running with $2 trillion deficits, running run rate annual interest, with interest at 5% or more, at $2 trillion a year. So this is going to be quite an issue and concern going on that we'll come back to. We're in the middle of ongoing strikes from the United Auto Workers as they challenge the big three with an ask of a 40% increase in wages, and again, cost of living increases, to catch up with the inflation that has hit the economy over the last 3 years. Now, regarding the Ukraine, part of the issue that we've seen with the potential for U.S. government shutdowns has been this issue of ongoing support of funding to Ukraine. So far, the U.S. has invested or donated or given or whatever it is, or allocated, I should say, $113 billion committed today. Not all of that spent, but the majority of that has gone towards the Department of Defense to replenish depleted supplies that were given under executive order or similar earlier in the year. And we're now also, for the first time, seeing House impeachment hearings begin as the corruption scandal around President Biden and his son Hunter Biden continue to grow, and as evidence mounts on that issue. And at the same time, we're seeing chaos in our southern border. So Texas formally declaring an invasion in the face of an actual invasion, as it turns out, led by Mexican cartels, and with mostly military-aged men, thousands of them crossing the border all the time. Even democratic cities like New York City have now finally admitted the obvious, that this mass illegal immigration is destroying the cities. So why don't we jump into this? I'm gonna share the screen here, if I can do this right. There it is. And good. All right. So just going back to this now, I want to talk a little bit about where we are. We just ran through some of those issues. Now I just need to get it to work. There we go. So last night, finally, Congress, both the House and the Senate, reached an agreement that is going to allow for the continued funding of the U.S. government over the next 45 days under what's called a continuing resolution, which is basically a way to kick the can down the road and not have to deal with the underlying issues. Really, the heart of the debate that Republicans in particular have been focused on is this runaway government spending, the issue we've just described of $2 trillion in debt in deficit, in 2023, and the demand to move from annual omnibus spending, where everything is voted on all at once, to single subject spending bills, where each department, for example, the Department of Defense allocation or otherwise, would be dealt with separately. Now, this is pretty critical because one of the things that's happened is, we talked about last month how Fitch Ratings, a credit rating agency, has downgraded the United States sovereign rating for its long-term debt. In part, they said this was due to an erosion of governance, pointing out that the repeated debt limit standoffs and last-minute resolutions, like we saw at midnight last night, have eroded confidence in the markets and in the credit agencies in the fiscal management of the United States. Moody's, the only remaining credit agency to keep the United States at a AAA rating or equivalent, is now also warning that these unresolved negotiations will worsen the fiscal pressures on the United States. And as we've seen over time, these shutdowns, these government shutdowns, can have pretty market impact on GDP and on the markets. And ultimately, this could precipitate a credit crisis for U.S. debt. It's not the first time that a shutdown would have occurred. If you look back over the last almost 40 years, more than 40 years, these things have happened. This was not the equivalent of the risk that we saw in May around a default and failure to be able to make good on our foreign debts and otherwise. This was about spending and continuing to be able to make payrolls and other things. So I wanted to talk in particular about what's happening in the energy markets, because energy markets are driving inflation today. We saw in August that CPI rose. It had been coming down for almost a year from June of last year when it hit a peak of 9.1, hit a low this year in June of 3.0. But then started to rise again. And so a lot of people are asking the question, well, why is that? What's happened? And this is really a story about energy prices. So at this time, you look back over the last year, we're now at the highest prices for retail gas that we've seen since November of 2022, when inflation was raging even higher than it is today. And over the last 3 months, oil is up, crude oil is up by a third from around $68 back at the end of June, up closing just above $90 yesterday, on the last day of the quarter, last day of September. All of these impacts are feeding into all sorts of other categories. Diesel, if you look at what happened last year, diesel prices were up 43% nationwide, and we have seen those prices come down a bit. But when you're up 42%, coming down 6.5%, 7% really doesn't do much. And in fact, on the West Coast, it's basically flat with last year. All of this is feeding into other categories, food in particular, which is heavily dependent on trucks and transport to get food to market. But it goes into other categories as well, transportation and even electricity and costs to the home. Now, in the meantime, in an attempt to try to keep the gas prices at the pump down, the Biden administration has been draining the U.S.'s Strategic Petroleum Reserve. Now, this, if you're not familiar with this, the SPR was a reserve that was set up in order to provide an emergency stock of fuel in the event of a global crisis, a supply crisis in the oil markets. We haven't had that. What we've had are rising prices, and we've had policies in the U.S. that have been limiting our ability to develop, extract, and refine crude. So as a result, the Biden administration chose as a really political tool to drain down the Strategic Petroleum Reserve, and it's now at around half of its full capacity, which means, of course, that two things. One, their ability to continue to drain it and get any price impact at the pump is increasingly marginalized. But most important, it actually puts the U.S. at real risk here in the event of an actual emergency that goes beyond price. So this has been a dangerous thing for us. Now, at the same time, our ability in the U.S. to refine oil, and this has a lot to do with prices, including why diesel is up so much. We are now at our lowest level in terms of refining capacity since 2016. We've come back up a little bit from the lows of last year, brought a little bit more capacity back on, but still down from 2020 peak. During lockdowns, the assumption was made this is a good time to try to push towards our green future and get rid of some of these refineries. We don't need that much capacity. Economy is going to be slow. And of course, once those decisions were made, it's very difficult to try to put them back on. And that's hurt U.S. competitiveness and pricing. Now, I want to link this conversation on energy and energy security for the U.S. to BRICS. So last month, we talked about the BRICS expansion, how the core BRICS nations of China, Brazil, Russia, India, and South Africa had voted to enlarge BRICS to include 6 new countries: Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates. And we talked about how, while this is a trade community to begin with, at the same time, there are some underlying objectives, including opposition to the U.S.-dominated global financial system and the weaponization of sanctions that we've seen in Russia, Iran, and elsewhere. These countries that are under economic sanctions here now part of this group. We talked last time about why these countries were motivated to join BRICS, and some of them were similar, some of them were different, many in opposition to the U.S. System, dollar-based and sanctions and otherwise, some of them actively under sanctions like Iran. But what we didn't really talk about was why did BRICS, the original nations, China and otherwise, want these new countries to come in. So if you look at what actually happens, this bottom level is China's contribution to the global total of either GDP, population, oil production, or trade. The second bar is inclusive of China, the existing BRICS nations. And what you see is that BRICS represented about 24% of global GDP, represented about 38% of the population, but only about 17% of oil and 19% of global trade. China really represents most of this. But this is the issue, and thus the motivation for China and other nations within BRICS. South Africa, which has no domestic oil production, Russia does. India has some capability, but China in particular, while it does have some domestic production, wants to ensure energy security. So by bringing in these new nations, including Saudi Arabia, including the United Arab Emirates, and including Iran, this is the point. So BRICS now have more than doubled their percentage of global oil production. They now represent nearly 40%. And when push comes to shove in difficult circumstances, the trading alliance, the most favored nation status between these parties within BRICS Plus, will benefit from this alliance to the detriment, really, of the U.S. and the West. So it's important to understand that, China is very sensitive to this issue. They have, you can see on this little cool chart here from Visual Capitalist, they have this some capacity, but they do remember the history of Asia in the mid-20th century, where Imperial Japan in the 1930s, which had no domestic crude production capacity at all, was completely reliant on imports, not just for oil, but for all base commodities, steel, manufacturing, but in particular, oil, gas, distillates, that sort of thing. And they were sanctioned and embargoed by the U.S. and by other nations allied with the U.S. And this precipitated a war, and it precipitated Japan's downfall, ultimately. So China hasn't forgotten this, and this expansion is really an objective to try to solve the issue. Now, at the same time as China is building these alliances in order to have access to more crude oil, they've invested heavily in oil refining domestically over the last several years. So since 2010, they have brought on over 5 million barrels per day net capacity. And you see this here, now almost surpassing the United States, which at the same time, the U.S., as we just saw, is basically flat or reducing its refining capacity. China here making a key decision to invest, and has now nearly doubled, if you go back to the global financial crisis in 2008, 2009, doubled their capacity. But what's also interesting is, in addition to this desire for oil, the future of BRICS is nuclear. While these nations are committed to expanding their resources in oil and otherwise, they are also on the forefront of developing new nuclear projects. So China has 24 nuclear power plants coming online over the next 4 years. India 8, and you look at the nations here on this slide, at least UAE, Russia, India, and China, now members of BRICS, and very committed to continuing on to develop nuclear power. Europe, on the other hand, is facing a significant dilemma for their own energy security around whether to continue on with nuclear power, a clean and sustainable form of energy on many fronts, and an affordable one, but it runs counter to the green energy agenda. And the sort of the woke ideas of ESG and otherwise, to make a transition away from all carbon. Well, they've also lumped nuclear into that group as well as something that they want to see eliminated. And a lot of that pressure came after the accident in Japan many years ago. So, but at the same time, across Europe, inflation, just like in the U.S., we see here 3.7%. across the euro area, 5.2. Those nations that have made those decisions to move away from nuclear and to become more and more reliant on other energy sources are the ones suffering the worst kind of inflation, the worst levels. And in fact, across Europe, we've seen wholesale electricity prices went up by 4 times in just 2 years since 2020. In some countries, much worse, as a result of the lack of energy security due to the abandonment of traditional sources of energy. In particular, Germany, which we'll talk about and focus on in a second, now has the highest, among the highest, tied there with Italy and Denmark, electricity prices to the household in the world. And a lot of this has to do with the decisions that their government made to kill nuclear. So they had 36 nuclear reactors back at the first decade of the century, under strong pressure from the left, from the Green faction and the Green Party. They shuttered many of those. They were down to 2011. Excuse me, by 2011, they were down to 17 reactors. And then after Fukushima's nuclear reactor accident in Japan in 2011, they closed all of them except for a handful. There were about 6 or 7 that remained. And even last year, after seeing what was happening to their supply of gas from Russia with the sabotage and destruction of Nord Stream pipeline, and with being cut off from supply from Russia, they continued down the path. A few weeks before Russia's invasion of Ukraine, while Germany could see very clearly that Russia was amassing, making statements of what they were going to do, they closed down the last 3, and then 3 more, the final 3, in April of this year, after having gone through a very difficult winter from an energy security perspective. It didn't have to be this way. Nuclear could have saved Germany, but they made the choice and now face pretty severe energy security. We talked about the BRICS countries, but other countries are making it a different decision. So France has woken up, having seen the energy crisis that hit them as well in 2022, and they have made a decision to retain their nuclear power capacity. And for France, this is extremely important, because you see here, nuclear power generation represents almost 2/3 of their total electrical generation across the nation. And they're an exporter to the region from the nuclear capacity. While the U.S. has the most nuclear power plants, 93, nuclear represents only just over 8% of our capacity. So we have a much more diverse energy grid, generation grid. Nuclear plays a role, will continue to, but in the U.S., it is impossible in this current regulatory environment to put on more capacity or upgrade. So just like oil and gas, nuclear is under pressure from the extreme factions in the political realm. Now, I talked about at the beginning that we have now surpassed $33 trillion in U.S. national debt. What's important to note here is this is over 122% of our gross domestic product, and it represents that's just under $100,000 per person, and $255,000, $250,000 per U.S. taxpayer. So enormous. And the problem with this, of course, is that with interest rates rising to 5%, interest itself is becoming a huge burden. We mentioned that on a run rate basis, it's going to be almost $2 billion a year. So, and the U.S. today is now one of the most heavily indebted. This is at the end of 2022, so statistics are a bit different, but other than Japan and Italy, we are the most indebted nation, and this has a drag on our economy, has a drag on our economic growth, on GDP growth. It has a drag on our ability to respond flexibly to new needs, to new situations, and it's getting much worse. Why there was such a showdown here over the potential for government shutdown and this continuing resolution to allow it to keep moving is about the deficit. So the conservative members of the House Freedom Caucus and others are focused on this issue that we have been spending money that we do not have. Deficit, by definition, deficit spending means you do not have the revenue to be able to fund it. And so that money comes not from revenue, but from creation of debt. And so we see that we have generated $21 trillion of deficits cumulatively since the turn of the century. That's basically 2/3 of the total debt of the United States. And those conservative voices are trying to address this number. They have a lot of work to do. And there are a lot of very strong political forces resisting them. It's been an interesting month. There was a lot going on in the political realm. There's a lot going on in many of the markets around us. The economy is going to be under some pressure from these auto worker strikes if they continue. The fact that we've averted a government shutdown is a positive. And for the most part, my voice and others who in January, February this year were calling for a recession, those calls are off. It's pretty clear the economy has done better, stronger than we'd expected. A lot of that has to do with the stimulus that has come out of government. And it's likely to see, again, the other problem, which is greater inflation. So I hope this has been helpful and interesting to you. I enjoy getting your feedback. I enjoy hearing your thoughts on this and engaging on it. We'll be back next month with another update. And in the meantime, we hope everyone stays well. Again, like it, share it, subscribe it if you're watching this on YouTube. And check out my homepage at stormwall.com, where you can see all of my news and information, articles, videos, everything else. And follow me on Twitter, now X. Thanks, everyone. Have a great week.